Wall Street is waiting with bated breath, and I think we all know why. Today, it is expected Facebook will file papers for its IPO, setting the stage for one of the biggest offerings in the history of Internet companies. Joining me now to share their insights on this developing story, Jeff Mackey, co-host of Breakout, on our partner Yahoo Finance, and Deborah Borchardt, IPO expert from the street. Thanks to both of you. Deborah, I want to start with you. What are some of the things we expect to learn from the papers once they're filed with the SEC? I mean, this is such an opaque company.
That's right. They're definitely opening the kimono, as we like to say on Wall Street. So we're going to find out how much money they make and how they really make it. That's something we've not really known. We're going to find out, if there are any legal proceedings against them, what kind of risks that the company has, also where they're planning their future growth. They're going to want to tell us that so that people will buy the stock, which is the whole point of this. And then we'll find out how much those executives make.
And I have a feeling that's going to be huge numbers. Jeff, let's talk to you about what people really want to know here, which is we've been hearing that the valuation of Facebook could be as much as $100 billion. Is the company really worth that much?
No. Would you like me to elaborate? I assume you would.
Please elaborate.
Okay. Listen, the company's going to have to grow into that valuation, and that's going to be the question. To Deborah's point, in August, this company is supposed to have 1 billion users. That's 14% of every man, woman, and child on the entire globe. I think that we've left our fast growth days behind us with Facebook. I'm not sure how they're going to explain how they're going to get to that next level in this S1. The jury's still out, and boy, the question isn't how they get people to buy the stock, it's how could they stop them. And I'm pretty worried about folks that chase this thing higher.
Well, that leads to my next question, which is who is going to get these shares right off the bat? Jeff, you're kind of coming out strong saying you think people should wait. Deborah, what do you think?
Well, I think that, as you pointed out, only so many people are going to get this because they're not selling that much of the company in the public market. And it makes you wonder why they aren't. Why are they going to go through all this trouble and only sell a small portion of the company? I think they'll come back with a secondary offering and release more stock later. So I think Jeff's right. I think maybe you'll see a pop in the beginning. But those people that buy this first round, they may get hurt when a second round comes out.
Jeff, we had a number of other tech companies like LinkedIn, Zynga, and Groupon all go public last year, all created a lot of buzz. Did we learn anything from those IPOs?
Not to chase IPOs. Most of those
especially ones in the internet space is what you're saying.
Especially ones anywhere. I think this Facebook IPO is a nice example of how to squeeze the most money that you possibly can out of an IPO, in the sense they're going to constrain the supply of shares, they're going to bleed it out into the market, they're creating a huge amount of demand for it. That's not to the benefit of shareholders, that's to the benefit of the venture capitalists, the insiders at the company, and it's just not something the public wants to be a part of. As far as the S1, which is what they're going to file today, is concerned, I think it'll make better reading than Facebook will make a stock.
So, Deborah, do you agree with that the average Joe shouldn't just go out and try to buy this stock at any time in the near future?
Well, I think the average Joe might be interested in getting involved in it because it's a name they know, but I would agree you have to really approach it with a lot of caution. We keep hearing about these 800 million users, but what we're also going to find out in this S1 is how much they're really on the site. A lot of them, they join, they set up a page, and then they never come back. And then we're going to get all this information about the advertising revenues. So how many people go on Facebook and really click on an ad?
And to the point of that, if I can jump in.
Yeah, go ahead.
The more intrusive Facebook gets, the less sexy it's going to be, the less appealing it is to users. If they use that information that's my personal information to extract ad dollars from me, well, frankly, just the idea of it creeps me out a little bit. And I think Facebook's post-peak in terms of their hipness to start. So monetizing these eyeballs, as they say in Dorkville, is going to be what it's all about, and I'm not sure Facebook has a path to doing so.
Right, and it's difficult to quantify the eyeballs, like you both say. We're hearing that the company has picked FB as its symbol. That seems obvious, but we still don't know whether it plans to trade on the New York Stock Exchange or the NASDAQ. Deborah, does it ultimately matter to traders?
Oh, it really does matter, and it matters a lot to these exchanges because they're both fighting for volume. Volume has been terrible, and they're really hoping that whoever gets it, it's going to bring people back to the market, get them involved in stocks again, and start being a part of the stock market. It's going to be cheaper for them to go to NASDAQ, where there is a market a cap on how much they'll spend to be listed. If they go to the stock exchange, it could cost them a lot more.
Jeff, do you have a prediction there on which way it'll go?
Yeah, they'll probably go NASDAQ. It's really NASDAQ's turf to defend. If they don't get these high-tech companies coming straight out of the chute, it's a problem for NASDAQ. It would be really a coup for the New York Stock Exchange to get it. But in terms of shareholders themselves, 6 of one, half dozen of another.
Okay, Jeff, let me ask you this. Facebook picked Morgan Stanley. We do know that to lead the IPO. How much of a boon is this going to be for that bank?
You know, it's a big one. There's not going to be a ton of follow-on business, so it's a prestige thing, and it's also another example of Facebook sort of running this like a little exclusive club where they're giving people taps. Only certain people will get to have shares. Only certain people get to list the stock. You know, it's Morgan Stanley gets to be the bank versus Goldman Sachs. I'm sure there was just blood matches, death fights going on behind the scenes. But again, it's one of those things that matters to Morgan Stanley clients because they'll get bigger allocations of this IPO, meaning they get more shares to flip right away. But it's in terms of the investment banks getting follow-on business, it's not going to amount to a lot unless this IPO market picks up.
I just want to take a look at an interesting list that I was looking at earlier, sent out over the ABC email. A list of the investors. There are more than 500 investors in the Facebook company, but we have a list of some of the folks that stand to benefit, a lot of them already billionaires, frankly, when this company goes IPO. I just think that's an interesting list. You see at the top of that Peter Thiel, Reid Hoffman, Mark Pincus, Microsoft, Goldman Sachs, and Elevation Partners. This is $1 billion deal we're talking about. But, Deborah, we've got a number of other banks who stand to gain because they'll be playing a supporting role. Do you think there will be any hard feelings among those companies?
No, this is how the IPO market works. You always have a lead underwriter, and then you have several more on the front page of the red herring, the prospectus. What I think is going to be really interesting is that I really think that most of these bankers are in it for the beginning. They want to get their money, and then they want to run. There's not as much interest in the secondary market as there used to be in the past. You know, when Jeff mentions Morgan Stanley's clients are going to get this stock, he's talking about the institutional clients are going to get it, not Joe, you know, Six-Pack and Betty Bungalow. They're not getting any shares. It's going to be the mutual funds and the pension funds.
Why do people care so much then? Go ahead, Jeff.
Well, they care because it's the next hot thing. It's been so long since we had IPO shares. We could trade and flip. And for every Google out there, which is the classic example people point to and say you could have bought it on day one and you'd quintuple your money, there's a lot of LinkedIns, there's a lot of Pandoras, a lot of things that you don't necessarily want to be buying. All the people you listed in that little sheet there, they're not just billionaires, but they're insiders and they're sharp money. I don't know why folks insist on buying things from rich people, but if a rich person knows more than you do about what they're selling, perhaps it'd be better to buy from someone a little less intelligent.
Interesting point. Deborah, we're hearing that this stock, as it is, probably won't hit the market until May anyway. What happens between now and then?
Then they go on the road show, and this is when they're going to all their clients and they're talking up the stock. Now, in the case of Facebook, you know, there's so much buzz and hype that there's not a lot to sell. But in a normal company, you're going around and you're trying to convince people you want this stock.
All right, Deborah Borchardt, IPO expert from the street, and of course Jeff Mackey, co-host of Breakout on Yahoo Finance. Thanks so much for both of your insights today. Thank you.
Absolutely. Thank you.